Hello, this is Cryptolyze. I hope you are well on this Friday, 15 December 2023. We meet today to talk crypto, to talk news, to talk BTC. We'll take a quick look at the macro as usual because we're actually waiting for this week's close. We'll explain why, and we'll really look at the charts to understand what's happening with the little hunt for liquidity that we had at the BTC level, and it starts right away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. Ledger has patched a huge vulnerability that was in the Ledger Connect kit. So concretely, what happened and what is the impact for you? So Ledger, you have to understand that it is a company that specializes in secure hardware and really secure hardware from Cryptolyze. This is the principle of Ledger. It is a hardware company. Concerning the software part, which is mandatory to be able to connect to the hardware, therefore generally connecting to the secure key. Ledger, you need a small piece of code called the connector kit, which we use in decentralized applications, in which the decentralized applications have a development library to be able to use the Ledger functions. And in Ledger, they have themselves their functions which are implemented to be able to make the connection between the two. Overall, you have to see this as being a key to being able to ask the person for information. That's exactly it. That means that it's as if we put a security SAS between the Ledger and the site. That's not all sites can communicate with the Ledger. They have to have implemented the Ledger Connector Kit. And in this Ledger Connector Kit, a priori, there was precisely a piece of malicious code which allowed funds to be drained. That is, when you connected to a decentralized application, you were actually asked for a signature, and this signature was the transfer of your funds to an address of an attacker. And to know that they have drained almost $6,10,000 currently, this is what was seen by ZachXTB. So I invite you to follow this account because it always does very good analyses we hate on hackers, on scammers, and it's very interesting the way in which he does the analyses. It actually allows you to improve your skills for those who are not used to analysis. Hain, so I really invite you to follow it. But what is important to know is that this implies that your ledger is not in itself impacted. All right? Understand that it is a signature. When you connect to a decentralized finance site, which could compromise part of your funds. All right? We are really into this idea. It's not from your entire funds because even it's EVM compatible only, okay? So it was everything that is EVM compatible. But for example, atoms. If you ever had atoms, it wouldn't have had any impact on that. And then it was directly validated and corrected in a few minutes. I think it was 40 minutes. It was deployed. And by the time everything was validated, etc., it was maybe 1, 2, 3 hours, in which there were actually actions that were possible. Okay, the bottom line is that in all cases the ledger is good, but personally I really use a ledger for my call storage. Okay, I have several ledgers which are used for my funds and which are distributed, but in the form of call storage. That means that I do not use them for interactions and decentralized finance. I only have one that is used for that, and it's just one that is used to transit funds. Okay, it's actually fair. It's not a manager in which I have all my funds. My ledger, the one in which I have all my funds, are in fact in cold storage, so they have no interaction with decentralized finance. And that's the goal. That's really the point of limiting access to everything. It's the same principle when you put money in a Livre A, in a PEA. It's money that is not in your bank account, that you cannot spend instantly. You have to do a transfer of funds. It's a bit the same principle, except that you have to do it with ledgers, and it's the same symptom. It's the same thing that we have in relation to that. And that will be valid in relation to Ledger, but in relation to any other wallet that you have. Understand that when you are on a wallet that interacts with other elements, in which you have a credit card, if we really have to do the schematic with a bank account, this credit card can be stolen. It can be hacked. Now with contactless, We know that we can retrieve it when we are within a radius of 2 meters around the person. There are risks that really exist. Same principle. When you are with a ledger which interconnects with decentralized finances, it is as if you had a credit card, and therefore you take these risks. And that is inherent. It is not because it's ledger, just because it's someone else doesn't mean it's infallible. There will always be flaws no matter what. The Visa credit card was cracked, as a reminder, in the 2000 years. Well, the person didn't abuse it. They went to explain to Visa how they had done it. But that doesn't mean that this reflection was interesting, and that's where I want to take you. Remember that you cannot rely on technology. You yourself must, in your management of funds, in your management of your funds, your keys and the use you make of them, be secure in a manner to be able to compartmentalize risks. That being said, the impact was relatively weak. I think a lot of people were afraid. But in this case, we had quite little impact. $6 on a flaw, which is still relatively important, like, this one is quite little. We're not going to hide it. We're going to move forward in the news with a speech from Gary Gensler on spot ETFs. Very interesting when we compare it with the speech he gave this week on cryptos, in which he refused to talk about cryptos, saying that it was no longer his priority, and which I really liked. It is that currently he explains that following the court decision, so on this it is the court decision in relation to Grayscale Capital. He says that he sees ETFs BTC in another way. There we clearly have the validation of ETFs. We are not going to hide. There is no half-heartedness possible. Grayscale's victory over the SEC resulted in the certain validation of all ETFs. The question will be when. I'll give you the dates here, in which we have the one which is most watched. It's iShare Bitcoin Trust, which will be that of BlackRock. Final date March 15. So certainly there is a due on January 15, and everyone is looking at January because everyone. We say that we must validate all the ETFs at the same time, otherwise it is not competitive, and we have ARK which arrives on January 10th. Except that for people who regularly redeposit information at the level of their ETF, it's iShare. It's going to be Fidelity. Well, it's not necessarily ARK, okay? So this implies that the one who evolves his request in relation to the various discussions with the SEC, and what we regularly see happening these discussions with the SEC at the level of BlackRock, and Fidelity, but not necessarily that of ARK. So it is also possible, which lacks information, that that of RK is refused to be filed again and validated at the same time as Mars, okay? So it's entirely doable. Does it necessarily have to be validated in January? So it's the beginning of Q1 2024? Not necessarily, okay? We don't forget that the last date is really March. And I tell you this because I myself tend to forget it. In a discussion I had yesterday with a friend, it's true that I was convinced that BlackRock's final date was in January, even though I know full well that it was in March. But quite simply because of the media hype that we currently have, I was convinced of that. And so that's why we have to be very careful about this. It's not because that it is marked here. There is one which is in January that it could not be refused, and then accept all the rest in March and RK submit a new request again to validate it afterwards, okay? It can go very well. And so that's why I think we still have a little time in terms of ETFs. In any case, we will have the answer very quickly. I remind you that we are the 15 December, and we will have an answer before January 10th, so that's less than a month. Speaking of ARK, I remind you that ARK is still selling Coinbase, and they are in a profit-taking wave since I believe this is the 4th or 5th sale they have currently on shares of Coinbase. And there is a big profit-taking that has been going on for some time now, so they are actually locking in part of the profits, which is quite normal in terms of strategy, and we are going to follow their developments a little bit because it's interesting to see that it is one of the players who is still very present in crypto, who is carrying out a significant profit strategy on players who should be valued. Because we are talking about Grayscale, and we are talking about Coinbase, which should be valued following validation of ETS spots. So the current profit-taking is interesting. We're going to note, and I think we'll certainly analyze it in 6 months, 1 year, see what the real movement was that they had at that time, and see if we had maybe information for later, At the macro level, we have the PMI service 1545 today, which risks being followed. The ECB, well, it has not changed in terms of rates, and we are in the same approach. In fact, we follow the Fed, perhaps a little less restrictive than that of the Fed, but we are approximately in the same approach, which is rather at the level of the S&P 500. We have here a delay yesterday, beginning day, which is rather impulsive. But this is rather logical. We really had the very, very strong bullish reaction on the FOMC, and there we will arrive in a form of delay. What will be interesting to see is that we will be in a lateralization, therefore something which will lateralize of this style, or are we really going to see the establishment of a distribution with a BC, Arkansas, ST, SAU, Utah, UTAD? So if we have something like that, we will ask ourselves questions. If we ever have a really flat form of lateralization, at that moment we will have a form of reaccumulation, and we will start to rise again. And that means that potentially we could see an SPF 500, which makes a new 88th. Quickly, then that we are supposed to be at the end of the year and we are supposed to soon enter the weeks of sales, of general profit-taking, and which would be logical given the performances we have had since October 2023. And even since 2023, quite simply, 2023 Mars hop, go down. So we had a performance which is just impressive at the moment. So it is logical to have profit-taking when we have on an S&P 500 made 23, something which is relatively rare in terms of progression on indices like this. In terms of the elements to really check on the macro, there are two things. One, the 10-year rates in which we clearly see this downward continuity. The reaction at the FOMC level was rather expected and monitored. We are in the process of validating below 4. The weekly close below the 4 is going to be really important. But we are in the process of hitting a big support. We would have to break it to instantiate ourselves, to settle in the area around the 327, and then here really potentially validate a return to the 2. That's the key element, okay? The second key element is found here. It will be the differences between yielding, the different American bonds, in which we have the 2-year and the 10-year. And in fact, when we see this clearly, this curve, we can clearly see the blue curve, which represents the 10 years. And we see here the dark orange curve, which represents the 2 years. And we see that we still have a gap, which is very significant, too large. We had a reduction in this gap, which was in the process of being carried out, which was rather positive. And we see that in this deceleration of rates, unfortunately, we have here the gap, which is widening. And I think that this is something that we will really have to monitor in the months which happen, because if ever we continue to widen the gap, really, we will have the long-term instantiation of a real anomaly, because we are not supposed to have a gap of this style. We are supposed to have the 10 years which are above the 2 years, and the 2 years and the 10 years which are below the 30 years. This is not the case. So the longer we stay in this anomaly, the more we have an inconsistency at the market level, something that everyone is noticing in any case. The other point to watch out for, it's really going to be oil. We see that we're starting to be bought out. I told you that the closer we get to the 68, the more we're going to be bought out, and that we're certainly going to don't stay long. We see that we're trying to break out directly here, okay? A little break-off structure here. See if we do a little retest before leaving, or if it's just a form of retest. But in all cases, this area will be systematically repurchased. Below 70, you can say to yourself that the oil will be bought back even if we look lower. In all cases, there will be some wick buying which will take place, and it will in all cases be a big buy zone to be able to support the price to return above $80, which is the price demanded by the people to be able to maintain their financial balance. If we continue with BTC, in which we have a week which is really strong in terms of volatility, it will be very interesting to see. With the news in particular from Ledger, we will see in the short term that it scares a lot of people. But when we zoom out, we see above all that we are oscillating between the two CME gaps which were carried out, and the closing weekly CME is happening this evening, which will be very important to see precisely where we are going to go. Are we going to really have movement over this weekend? Or are we going to continue to zone out in the middle from this range? Because I think we are in the process of create a range surrounded by these two CME gaps in which we will certainly fill them in extension. If we continue in the short term and dive a little into the daily this time, we can clearly see that yesterday was a really strong day in terms of volatility on the same day. With mainly Ledger, it played a huge role in which we had a very strong bearish peak with this wick, which went to liquidate a large part, and which in fact simply went to retest part of the imbalance which was there before leaving again, and to reaccelerate upwards. What is interesting is that really the level of retesting here that we had defined was held and is still being held currently. The big question that we will have to ask ourselves is that there we have a distribution, we have an accumulation, and there normally we would be supposed to have a distribution. When we look a little bit at what is happening, we would have accumulation, distribution, equalization, redistribution. The fact that we do not break this level and that we cannot consolidate above it confirms my bias of having a fall which will take place in precisely 3 stages. First, second, third, and that's a little bit of what's happening there and that I'm going to monitor. However, we do not yet have the validation of the distribution. We are in the process of setting up the distribution. It could very well be a reaccumulation here, and to do this, in fact, the validation we will have is sure. An instantiation above 43,400 with a consolidation above. Clearly, we will go here to look for the CME gap, and we will look for liquidity here. We don't forget that we really have 2 polarities that are being established. Besides, here we are just going to go up because first, second, third, which gives us targets at 39,000. We have a first polarity which will be below 40,000, in which we have a lot of liquidity. We can see it clearly at Kingfisher level, 40,000 first. Liquidity pool, second pool between 39.38 and third pool, which has almost disappeared. But which was between 38 and 37, we see that it moved upwards, so there is a part of profit taking, or at least a part of cut, to be able to, in fact, ensure part of the profits. So what is interesting to see is that here we have this first zone of polarity, which is generally here between 40 and 38, which corresponds to our objective 1 and 1 of our projection in 3 times, and which also corresponds here to the breakout retest of this bullish acceleration which took place, also in 3 time. So it's going to be really interesting to see the construction that we're going to have today, and to know if we're actually going to stay in this I zone. Something that could happen quite simply have a very, very low volume because overall, since we had a little movement, but since Thursday we have almost no movement, okay, when we see we have no oscillation, whereas before we really had movements which still had a relatively strong amplitude. This is not the case. We take the time and we have very little volatility. We have intraday volatility, but in fact during the week we had quite little volatility when we recompile the real movement. Here, if we continue like this and we stay in this range, I think we could stay there for part of the weekend, so we should be able to break this range very quickly, which is maintained in fact here by this support and this resistance there. We can clearly see that the 2 maintain the course and therefore we are working in this volume zone, which is rather classic. So that is to say that the movement which will emerge will in all cases be impulsive, and that is what we will want to see in all cases. On the order flow side, what is interesting to see is that we see hedging, which is still being put in place. We have a continuity here of the reduction of longs, so that means that we have a positioning. In fact, there are 2 possibilities when we see this. Either we have a reduction in purchases, which means profit taking, or we find ourselves with an increase in shorts, which are generally a hedging of the spot which is carried out. What is interesting to see is that we have open interest, which remains relatively flat. So this implies that we have more or less a consistent level of positions which are open and closed with leverage. So we have a market which is in status quo, which also corresponds here to the market which is relatively flat. We have no increase on one side or the other. On the other hand, finally in terms of leverage, we can clearly see that we have a short opening. For me, I see it as hedging which is in progress, to be carried out by top traders in order to be able to counterbalance their position. So when we see that generally it's something that we've already seen, and which would confirm to us the possibility of having 1, 2, 3, it's something that is pretty much common for then after being bought back in that area. And there we will see if we have a good accumulation to start the increase again. It could be interesting, and therefore in terms of temporality, we could say to ourselves that we could reach the level of Christmas in this part before having the accumulation and start again on the rise with all the Christmas news. We is used to seeing it, moreover, the fact that it is days or weeks, in any case, in preparation, in which people without family talk about crypto, and therefore inevitably we have impulsive purchases which arrive, and we actually have an injection of liquidity, in which we find ourselves on accelerations which are relatively short, but which nevertheless can be enough to trigger a small short squeeze and go for targets a little higher, and this is something which we will check and wait for. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and above all, it supports the channel. And if you really want to support the channel, share. Thank you very much. We meet at 13:30 to talk about ADA, Cardano's crypto.